Welcome back to the Rural Roundup. This show is produced in association with the Scottish Government. On today's episode, we're joined by Doug Schreiber, an NFU mutual agent who's going to talk all about farm insurance. But first, Mary Jane, how are you?
I'm good, thanks, George. Just getting ready for the Women in Agriculture Conference, which is tomorrow at Murrayfield. So looking forward to that. But like everybody else, been enjoying the lovely rain that we've had constantly since November.
Yeah, certainly Aberdeenshire's, you watch the news and it seems to be, there seems to be quite a lot of making all sorts of statistics with the weather. We're not seeing the sun, we're getting continual rain. I can't remember how much of a percentage, 400% normal rainfall in January. Everything's very wet, and I think it's just the fact that it doesn't seem to be stopping.
No, it's the same in the Lothians. I don't know what percentage of rain we've had compared to normal, but on one hand, we were kind of expecting it after such a dry summer last year, and I suppose it's reassuring for the likes of Scottish Water that the reservoirs are hopefully filling back up, and the water table is certainly very close to the surface, which makes it difficult for getting on to do any, thinking about doing any ground operations, any sort of early sprays or things like that are certainly not possible at the moment or for the foreseeable. But it does mean that we've got enough water now to see us through. And hopefully if we get a period of dry weather towards the end of February into March, things will be looking better for spring groundwork and heading into lambing and calving.
Yeah, I think that's what we're seeing in summer. It was just every day you woke up and sun was shining, it was warm, just every day.
Yeah.
You didn't need to look at the weather forecast; you just knew where it was going to be. And now we're into this spell the same. You're going to wake up in the morning and invariably it's going to be wet.
Yeah.
So yeah, it is having an impact on farmer workloads. There is nothing being done out in the fields. Water line in fields is going to take a fair bit of drying before they can even start. Starting to hear reports that people who are grazing, um, obviously this is taking its toll, just the wet weather, poaching and such like, and that's going to impact on that grass right through the season now.
Yeah.
It's going to do damage, so it's definitely affecting things, and I think we just wish it would stop.
Yeah, and down in the Lothians, we're similar with the level of rain we've had, but we didn't have that really cold spell that you guys had and that extreme snow. In fact, I'd say it's been a very mild winter, and we do a bit of gritting locally, and I don't think my husband's been out at all this year so far. So that's very unusual not to have had any cold sub-zero days, really. I think that's.
I would say that's the funny thing with it as well, that normally in January we get a spell of unseasonably warm weather. That hasn't happened this year, and even during when we had the snow, the 10 days of snow, it wasn't really that cold. And now and since then, we've not had many frosts. In fact, I don't think we've had any frosts, but it's never been warm at all. It's just this wet, dull, weather that we just seem to be getting
Yeah,
continually.
dreich.
Yes,
That's the only
yeah,
word for it, isn't it? Dreich.
yeah.
So I suppose onto some more positive things then, George. We've got some deadlines and grants and things opening up at the moment. So I think sort of final reminder now for people for doing the PSF claim, the Preparing for Sustainable Farming claim. The deadline for claiming that is the end of February. So that's just a sort of timely reminder for people that we really don't have long to get those claims in now.
Get those claims in. Get your bank statements looked out. Get invoices, soil results, etc., etc. Get them uploaded. Get the claims made, and yeah, by the 28th, that'll be up.
And then we've got some other schemes that are sort of opening up again at the moment. So the EEC scheme, the Agri-Environment Climate Scheme, opens on the 23rd of February and runs till the 20th of June. So that's for anyone interested in doing an Agri-Environment Climate Scheme. I believe the results for last year's were just announced last week.
That's right, yeah.
Positive news all round for everyone, I think. So it's definitely worth looking at again for your business, whether you've done a scheme before and you want to roll into a new 5-year contract contract or whether it's something you've never looked at, it's worth having a look through those, and also just making sure that you read the rules. If you were in a previous 5-year scheme, just check the rules because some of them have changed slightly, and it might be worth just making sure you're familiar with them before you apply.
No doubt there's certainly a bit more interest in EECs this year, just I think the way the whole arable jobs looking, and probably lack of contracts, which it reduces a bit of the uncertainty. In the past, folk have maybe been able to secure a contract for most of their area, but now they're struggling to do that. So they are thinking out of the box a wee bit, and I suppose if they go into an EECs, it's guaranteed income, isn't it?
Yeah, and some of these options like the overwintered stubbles into green manures, as you say, gives you that guaranteed income. And then it also helps reduce stress a bit in years where you have weather like we've got at the moment, that's one less field that you need to worry about getting, compacted or whatever. If it's gone winter stubble, you don't need to touch it till later in the year. And then getting a green manure established, as long as you get it established in good time, that can really help improve soil condition overall. So it is worth thinking about those options on rotation, and even things like wild bird seed, you can have up to 10 hectares of that depending on farm size. So that might be quite an attractive option for people. You get paid to establish it, you get paid for the seed, and then that's just one less area to to worry about come harvest time.
And there's also a new scheme on the go, the Agritourism Investment Scheme, or AIS. It's ongoing. It closes on the 13th of March.
Yeah, and like all the schemes that are coming out at the moment, all the guidance can be found on the Rural Payments website, with some examples of the types of things you can claim for. So
Yeah.
if you're involved in agritourism or thinking of getting into it, well worth checking it out.
Yes. Yeah. And we're not that far away from every consultant's favourite time of the year, the IX window opening. So probably it's as good a time as any just to give folk a wee reminder. If you're still wondering what's going in the ground, if you're still wondering what you're doing about enhanced greening, it's maybe time to just have a wee think, speak to your advisor, and start putting a plan in place. Today we're going to be speaking about something that every farm business basically has to cover itself with. Today we're joined by Doug Schreiber, who is an NFU mutual agent covering the Edinburgh and Lothians area. Hello, Doug.
Morning.
So do you want to give us just a wee bit of a background as to what your job entails?
Sure. I've ultimately been working for agencies of the NFU Mutual for about a decade now. Originally as an employee, and then 5 years ago I became self-employed. Largely on a day-to-day basis, I'll spend most of my time out with farms and other businesses as well, discussing everything from insurance to risk management, and largely speaking, methods of protecting businesses and assets should something happen, whether it's big or small.
And when people have an insurance review with Doug, what sort of things are you discussing? With a typical farm business in the Lothians, what's your sort of starting point for discussions?
Typically speaking, it's a rather soft approach, finding out generally speaking how the business goes. I tend to find that insurance is one of those grudge purchases that most folk are not super keen to have you out to discuss every year sometimes, particularly if numbers are up. So normally I'll start off conversations regarding them and their business, finding out how things have gone for them, any challenges that they're aware of, anything that they think is likely to come in the future year or years, any expansion plans, options for selling up for housing, which you'll be aware, obviously, in the Lothians area has been something of great interest over the last few years. Generally speaking, if you go in too heavy with hard number crunching, folk will just switch off. So you have to make that approach quite soft, and let them do the talking and try and get the information that you're looking for from them, sometimes without them even realizing they're giving you the information.
Yeah, absolutely. And I suppose it's an opportunity for smaller changes as well, like, a bit of new equipment or something that you need to add to their policy. I guess that's the time to sort of bring it up. And you kind of mentioned it yourself there. You're not the most popular visitor to the farm, because it often means spending more money than last year. And I think, like all costs, it goes up every year. So we're interested to find out if there's sort of things that farmers can think about and prepare for ahead of their meeting that helps you out, and just things that we can help, reduce the costs of insurance a little bit for people.
Sure. So typically speaking, ahead of any meeting, this will depend partially on the size of business that you are. We've businesses that we look after, farming and otherwise, that are monsters, and we've got one-man bands out there as well. And the requirements there and the attitude towards risk is often very different. From my perspective, and from the underwriting perspective, we're looking for organisation where possible. Typically speaking, it's more difficult and more challenging for me to present decent renewal terms or new business terms, for instance, if somebody's approaching us last minute and doesn't have a lot of their information to hand. So typically speaking, we might look for updated figures regarding your turnover, what sort of business activities you're performing, and if anything has changed over the last year, and numbers of employees on site, what those employees are doing, anybody who's got any specific qualifications. That could be vocational qualifications, or it could be something like health and safety. It doesn't have to be limited specifically to farming or to any other business area that we happen to be discussing at the time. But if you're able to get in advance things like your most recent set of audited or unaudited accounts, things like your wage roll, just ballpark figures are normally fine, and any real changes to what you're doing, and changes could be anything from buying or selling land and or buildings to certain aspects of machinery or anything along those lines. And what also helps from our perspective is if you do have claims on the go, and we'll have detail about where the claims are from our perspective, but if you've got any queries or concerns, or if you've got additional information, that's often quite a good time to bring things up, as well as at the review, where you're face to face with somebody from the insurer who can take up those points on your behalf.
And you mentioned there, staff that you might have on farm that maybe, got a health and safety qualification, or, maybe you've got a new start who's come to the farm straight out of college with, an agricultural degree or something. Does that help make a difference to premiums and the costs? If you've got someone that's more qualified, does that, bring any of this sort of premiums down?
So this depends vastly on partially the industry we're dealing with, but as well as that, it'll depend on the insurer you're dealing with as well. From our perspective, we look after an awful lot of farms across the UK. Farming is traditionally a time on the job based background or criteria from an educational perspective. There are people who go to SRUC or SAC, for instance, to pick up university or college based qualifications, which are all great to note, and they're more aligned to making sure that the job that you're doing for the business that you're working for, whether that's your own or somebody else, is as efficient and probably profitable as possible, and that your knowledge of what you're doing is there. It's not necessarily designed from a health and safety or a risk mitigation perspective. When we're talking about qualifications that can specifically have effects on premiums, if you've got members of staff who have got, IOSH qualifications or have been on certain LANTRA-based courses, these are all the sorts of things that if they are collectively taken as a group of positive risk factors, we can present that to the underwriters, and that might have an effect on premium. It's dealt with entirely on a case-by-case basis, and it'll depend partially on how relevant that qualification is to the industry that we're talking about, as well as probably on your background of claims in that specific area. If you've had lots of claims from an employee perspective, for instance, any positive risk preventative measures that you can take, i.e. putting folk through health and safety qualifications or taking a more risk-averse approach to running your business, that's the sort of thing that we can help mitigate potentially premium increases, or we can look to discuss with the underwriters whether or not there is discounting available. And it's not a clear cut, if you've done this qualification, here's a 10% discount. It's all dependent on the overarching scenario.
Yeah, of course, that makes sense.
It's maybe just with my Aberdonian head on. We hear your farmers insurance bill very visible in the farm accounts. When you're putting together a premium proposal for a farmer. What's the items that really drive it up? Is it the machinery? Is it personal liability? A lot of farms, they've got a big value of stock nowadays. What's the items that really shove up a claim?
Yeah. So there are probably a couple of different answers to this question. If I take the claims side of things out of it, if I imagine that your business, for instance, just now has had no claims at all, there are two immediate standout elements that are driving premiums up just now. That is storm-based cover on buildings. And the second is value and type of machinery involved as well. And if I look at 10 years ago when I first started dealing with farms in one way, shape, or other, a big expensive tractor might cost you £100,000 to £150,000, whereas now, that's easily doubled, maybe tripled. You look at combine harvesters, for instance. Back then, a big combine harvester might cost you £250,000. You're now looking at £1.25 million. So the cost of machinery there from that capacity has exponentially increased way faster than inflation has. And when we're dealing with claims in that scenario, let's say you've got a combine that's had a gear or something which is heated up and caused a fire, for instance, quite regularly the cost of replacing the components and the labour involved and literally breaking that machine down to bits before you're able to put that back together, that can come in at a higher cost or a less time efficient cost than just replacing that vehicle. So from that perspective, the types of vehicles, and I'll take this down to the smaller side of things as well. If you look at quad bikes, a half decent quad bike just now could set you back between £15,000 and £20,000, and they're one of the most heavily theft attractive items that I deal with on a day-to-day basis. And we see theft sprees quite regularly. So pound for pound, your quad bike is likely to be adding a fairly hefty premium to your policy. Simply because we're dealing with lots and lots of thefts of these items, whereas on the combine or the larger vehicle perspective, it might be fire, for instance. On the buildings front, as you'll be aware, we've had, I couldn't even count how many of the yellow, amber or red warning storms we've had over the past 5 or so years. I'll take Storm Arwen as an example back in 25th of November 2021 from memory. And that's the sort of event which can cost us tens, if not hundreds of millions of pounds, should that impact the vast majority of our rural customers in one specific area, for instance. And typically speaking, because you can't necessarily charge a farmer, 50 times their previous premium because they've had a claim at £500,000 for a building getting blown over, that cost is spread out amongst a number of farmers within that geographical area and across the rest of the country. Those are the two, the theft and fire side on specific agri vehicles and storm on the farm buildings. Those are the two single biggest elements that I've seen over recent years that have a knock-on effect on everything.
I suppose from a practical point of view, Doug, we've all had storm damage. You mentioned Arwen, but even last year there was some really big. There was one that came sort of late harvest, if I remember. It kind of caught people off guard because it wasn't storm season, if you like. There's probably practical things you can do at home to prepare for it. Shutting barn doors and whatever. Is there anything that people can do to, obviously you've got excess points to think about as well. Is there anything people can do to reduce the premium on that, or just from an insurance point of view, is there anything we can do?
So specifically on the storm side, it's quite a difficult point to reduce the premium in that respect. The stats are saying now that these events are happening more regularly. They're getting worse when they're happening, and within reason, yes, you can hunker down as much as you want, but if the wind's going to come at your farm from the wrong direction and cause havoc, then there's very little you can do to actually prevent that from happening. And because we have the data to support that, it's difficult for us to justify charging one farmer in an area less than another farmer just to try and keep premiums down, when really both farmers might be equally susceptible to the same storm coming along and causing damage. We've got to try where we can keep things as fair as possible among everybody. That's the point of us being a mutual in that respect. Now, what I would say is typically speaking, the issues that arise regarding storm claims are where buildings are maybe not in the best of nick in the first instance, or maybe there are already panels that have been taken off or have, through wear and tear, or maybe smaller ones in the past, they've been damaged and they've not been replaced. And that doesn't necessarily mean that the building is going to have huge damage from a storm, but it's going to maybe be a contributing factor to whether there's likely going to be more damage to that building during that storm. I would say maintenance is probably your best bet just for avoiding having to make a storm claim, as well as, if there are old and deteriorating buildings, where possible, have a property maintenance plan in place where you've got a set budget every year that you're going to try and keep the upkeep of the farm as positive and proactive as you can.
I remember vividly, I think it was 2010, the winter 2010-11. It was the last time we really had proper snow. A lot of farm buildings in the northeast of Scotland, the roofs just caved in. Simple as that.
I mean, in a situation like that, or when you talk about the beast from the east, for instance, or you're anything where there's category red of anything really, that's where we know that we're going to see a big influx of claims coming in. We've got a dedicated process for surge events like that, where the idea is that you can get seen to or dealt with as quickly as possible. But if I take Storm Arwen as an example, there were claims there partially due to the shortage of reliable labour and the shortage of steel at an affordable price, for instance, that led to some folk waiting over a year before their building was fully back to where it was. And if you're an area of 100 farms and 50 of you are affected by a big storm coming through, there are only certain construction companies locally that are going to be able to specialise in either putting your building right or rebuilding it from the start. So this is something to consider, particularly when it comes to things like your loss of income insurance on a policy, where, in the past, when folk would build farm buildings themselves, they might say, 12 months is long enough for me to put a shed back up. But nowadays, with the amount of time that it could take you to get those materials in, get the labour in, and let's say you're not physically able to put the shed up yourself, that can stretch well on past 12 months, up to 18, maybe even 24 in a typical farmer's scenario.
And then if we're thinking about, you mentioned there maintaining older buildings, Doug. I mean, some of these buildings that have been damaged might be really old vernacular buildings that have lost an entire slate roof, and it's not practical to reslate that. And you might be looking at putting a more modern shed roof on or something. And, how important is it to think about getting your farm valued for what it would cost to replace it entirely? Because in some instances you might not be replacing like for like because it wouldn't be practical. You might be going for something, a steel frame, whereas before it was a stone built barn or whatever.
So from that perspective, and this isn't just on a farming capacity, this is across pretty much anything, whether it's your personal home insurance to vehicles, anything at all, underinsurance can be a real killer when it comes to certain types of claims. We have benefits if you're an NFU Scotland member, anyway, on our own insurance policy, where underinsurance is taken into consideration, but there's a special condition that waives underinsurance if you're reactively and proactively evaluating your buildings every year with an appointed representative from the NFU Mutual specifically on our policies. But I would say that generally speaking, underinsurance can be a kind of a silent killer, because the figures that we get to index buildings every year, they're not necessarily designed to specifically go after farm buildings or buildings which are predominantly made from steel or class grade A listed buildings, for instance. It's very important for every business or every property owner in that regard to have a survey performed every probably 3 years minimum to properly evaluate what your loss might be should you have something dreadful occurs, like a fire or a really bad storm, for instance. The vast majority of the time that we get these surveys done, we can do them internally, or we can, quite happily deal with you if you've got somebody external that you want to perform the survey yourself. The vast majority of situations that we see on farm buildings are that they are underinsured, and quite often grossly.
Yeah, I can imagine.
Obviously, farming's changing. Well, the world's changing. I certainly know that in our world that there's more interest in computers being hacked and such like. Are you seeing more farmers now starting to insure their businesses against any viruses and business interruption and all that and what that entails?
We're getting questioned about this more often. So, and this is where I think the farming industry is probably a little bit behind the times compared to most other businesses, for instance. Historically, farms could run with very little in the way of digital services, online banking, things like that, where your average business that might have a pay point at the front of the cash register, for instance, or might have a website or even a Facebook or an Instagram page, they've been susceptible to a lot more of the sorts of cyber-based attacks that we're seeing, in the news. You see M&S, you see Harrods, you see Tesco's, you see, a number of these big companies saying they've either faced a threat or they have been hacked. Now, from that regard, we struggle sometimes, and this isn't necessarily the fault of anybody specific. We struggle sometimes just now to get quotes for cyber insurance for farms because, typically speaking, most farms don't have the base level of cyber security or protection in place in order to get an insurer to say, yes, go ahead. See, a decade ago, that was very much a different scene. There wasn't so much known about this sort of thing, and the level of cyber and online damage from a financial perspective just wasn't where it is now. It's now taken so seriously by insurers that you have to have a base level of protection in place before they'll even consider giving you the quotes for certain types of cyber cover. So now it's actually quite difficult for us in some situations to just produce a quote. We can give you indications, but those indications will come with a set of caveats saying, look, if you want this to go ahead, you've got to enable things like two-factor authentication on all devices. You've got to limit who can sign checks above a certain amount of money so that there's no individual who's got complete financial control and can commit fraud against the business, for instance. And there are various things along these lines that any business, farming or otherwise, should have in place as a bare minimum just to protect yourselves, let alone in order to get insurance.
And thinking about using technology positively then, Doug, moving away from the cyber side of things, you mentioned quad bikes being like sort of the number one thing to be stolen. And a lot of the tractors that you can buy new now have all the trackers and things built into them. Is that something that you can retrofit to things like quad bikes? Does that help at all? Or is it not
Sure.
terribly?
So the tracking information seems to be varied. We've got situations where there have been trackers on quad bikes that have been found less than 50 meters from where they were stolen because the thieves know exactly where they are on the bikes. They've got an app on their phone that tells them where it is or something else, and it's gone before they're even down the end of the road. Now, from our perspective, we have specific incentives in place for farms that have got their vehicles CSAR registered, and that normally comes with a data tag or a data tool. That's a type of tracker that's involved. That sort of thing, typically speaking, helps regarding the likelihood of us getting the vehicle back, and that doesn't necessarily mean chasing somebody down the street. That could be half a year later or a year later the vehicle turns up somewhere, and because it's been registered on this database, we know who it belonged to, we know when it was stolen, where it was stolen from, and we can return that vehicle, or in that capacity we already have paid you out to replace that vehicle, and because that's an asset now that we can dispose of and get some of the costs back, it allows us to pass a discount on to farmers who've got their vehicles CSAR registered. We've actually recently introduced a dash cam discount as well, and there are specifics behind the quality of the dash cam and what the dash cam does in order for you to be able to be eligible for this discount. But we've got data now that shows from an accident perspective that dash cams are quite good things to have on agricultural vehicles, and can perhaps help improving that liability is entirely or mostly the fault of the third party involved and not anything which is pinned on the farmer, because that's one of the things we regularly see when there are no dash cams involved, and we're sometimes forced to settle on a 50-50 split because there's no evidence one way or another who was in the wrong.
Yeah, and on dash cams, obviously agricultural vehicles are enormous and moving on, quite often busy public roads. Would you maybe don't know, but would you recommend having one on the rear of the vehicle as well? Because you might have a big bit of kit behind you, and somebody might run into the back of that or something because they're not realizing how long it is or something. Is that something that you'd recommend, or is it just for the front?
So the minimum that we'll accept is a front-facing dash cam. We're not going to turn anybody away who's also got a rear-facing dash cam, but there has to be a front-facing dash cam on the vehicle, and it has to be 1080p resolution. There's a few other specifics that are there that have to be in place in order for you to be eligible for this discount. And so grainy footage just won't cut it, because it's still not going to show necessarily who the third party was or pick up registration plates, for instance. And so there are a few sets of criteria. It's worth contacting your local agency to find out what this criteria is in order to see if there's anything that you can do to get discounting yourself. But I would absolutely encourage you to just think proactively as much as you can. If you're looking down the lines of getting rear-facing dash cams as well as forward-facing dash cams, go for it. We're in a very much an evidence-based society just now. He said, she said. It's all allegations until there's proof, effectively. And in an instance where there's an accident and there is no proof, often insurers will separate or will split on a 50-50 basis unless they have direct evidence that one party was at fault.
And in that situation, if you're in an accident, like a minor bump, I'm thinking on a side country road somewhere, and you've not got a dash cam, neither's the other vehicle, what sort of bits of information should you be getting at that point that helps you as an insurer?
Yeah. So we would normally recommend, first and foremost, don't ever just flat out admit liability. That does happen sometimes, but don't just admit liability, because there might be other things that you're not aware of that could have caused the accident. You don't know if the person that you've been in an accident with has been under the influence of something, or on the mobile phone, for instance. So that's probably the first thing. But typically speaking, your normal exchange of details, who, where, when, what, why, that sort of thing. And make sure, if you can, collect as many photos of the site as you can, your direction of travel, their direction of travel, any accident or injury that's involved, any damage to your vehicle or to their vehicle, for instance, and as well as registrations and full names and addresses of anybody that's involved, and particularly the drivers.
So, Doug, is there a policy area that farmers are maybe should be looking at taking up, or maybe one that's coming down the tracks?
So insurance has been around for a long time, and it's rare that we see new policies coming down the tracks. But in relative terms, things like a directors and officers or a management liability policy, and that's one which we're seeing more increasingly taken up, particularly for farms that are in busier areas from a public footpath or pedestrianised perspective. Down in the Pentlands, for instance, where there are lots of rights of way, cyclists, runners, that side of things. And a directors and officers policy is, or management liability, and it's taken out in the name of the business and in the directors' names themselves, effectively, and it would cover anybody involved in the management or running of that business, including management level. You don't have to be directors, and as well as your spouses in that capacity as well. And basically, what the policy does, it's a defence-only policy, so it doesn't allow you to go after folk, but in situations relating to the business, if you are allegedly, or if you've been accused of actual wrongdoing in regard to your management of the business, this policy will pick up defence costs, but will also pick up civil payouts to a third party in the scenario. And to give examples, we've had situations where farmers have been accused, and we've been able to prove them wrong, but farmers have been accused of threatening people with a gun on their line, for instance. Situations where, one that comes to mind was there were some youths slashing bales of silage, and the police were called, and ewes were taken away, and then a few days later the farmer got a visit by the police saying that one of the mums of one of the ewes had claimed that the farmer had threatened their children with a gun. Now, there was no evidence of this whatsoever, and there was CCTV on the farm showing that the farmer had not left the property with a gun, but that's the sort of thing that this defence policy will help pick up, because obviously you might be up for potentially a lot worse than just losing your gun licence if you're caught actually threatening somebody in this regard. And the management liability policy is probably one of the main newer types of cover. I say newer; it's probably been around for a few decades by now. But it's one of the newer types of cover, which is slowly infiltrating the farming side, where you are seeing more situations that might historically have been attributed with a big city centre business getting taken to court by a customer, for instance. We're now seeing that sort of behaviour from members of the public, and even from tenants. For instance, if you've got livery stables on your land and there's a dispute there in some way, shape, or form, or somebody accuses you of threatening them, that's the sort of thing this policy can help pick up as well.
If you could give anyone listening some top tips when they're coming up to renew their insurance, then Doug, what would your takeaway top tips be?
Probably the main tip is don't leave it last minute. Where possible, we'll sometimes still see situations where something gets in the way of your business, and we're out seeing the client for renewal after the renewal date, and we'll try to get out and on between 3 and 6 weeks in advance of the renewal date where we can. But we understand that's not always possible. But where you can, be as organised as you can. Do it in plenty of time, so if there are any premium increases, you can look at negotiating. You can look at ways to mitigate that, or for instance, if you're looking at any unusual covers, or if you're looking at sudden business expansion, buying a new farm, setting up a restaurant on your farm, anything along these lines, diversification, for instance, that we can get a full run at things for you and make sure that you're covered adequately, but also at the best possible rates. I would say I tend to find premiums are normally keener the more advance notice we get, because we're not left running around at the last minute trying to get things done for you and not able to negotiate best terms.
Perfect. That's great advice there, Doug, and thanks for joining us today.
No, not a problem. It's been a pleasure. Thank you very much.
Thanks for listening to this episode of the Rural Roundup, and we will see you back here on the 18th of March with our next episode. This episode was hosted by George Chalmers and Mary Jane Lawrie, featured our guest Doug Schreiber, and was produced by George Goley and edited by Cameron Waugh.
The Farm Advisory Service Podcast. Audio advice on livestock, crops and soils, environment, rural business, and more. Brought to you in association with the Scottish Government.